Hi, I'm Tom Lydon, editor of ETF Trends here in Chicago at the Morningstar Conference with Mannik Dhillon, who's president of VictoryShares. Great seeing you, Mannik.
Thank you for having me today, Tom.
So we want to talk about dividends. Are we finding that dividends are becoming a greater part of clients' portfolios?
Absolutely. Particularly for folks closer to retirement, it's always been a great source of income. That's not changing, and it's only growing in terms of its need in a client's portfolio. Now, what's really happening now is that as uncertainty increases, finding different sources of income and dividends is becoming more important. So that has not changed, it's only increasing over time.
But there are so many choices today for advisors and so many different strategies. Obviously, diversification's critical and really important, especially as you go away from the conventional fixed income allocations. The Barclays Ag has changed a lot in the last 10 years. So walk us through what advisors should be thinking about as they look at these choices.
Sure. So in a desire to source income, historically you could go to fixed income like you said and find a very risk-averse way of accessing that income. That went away. So advisors needed to find new sources like dividend-paying stocks to do it. Now, oftentimes you take on a little more risk when you go into equities versus fixed income, but if you need income, what do? The best defense that anybody has in a portfolio these days is diversification. So should you have some fixed income to source income for your clients? Absolutely. It still has a place in the portfolio for the downside protection it can offer. You have dividend yield stocks, which are heavily weighted toward the percentage of dividend relative to their price that they provide. And that's what people tend to focus on or have focused on mostly in the past. But then there's a great diversifier in dividend growth companies. So these are companies that are growing the amount of dividends they pay year over year. And they offer not only that income that clients need, but can offer that downside protection, the capital growth and preservation as well. So as retirees and clients are living longer, and longevity is an issue in demographics, having a ballast to just yield players is a good thing in a portfolio.
So when you look at clients, and income's important, especially as clients are living longer, having that dividend stream's important. Talk about the dividend growth strategy that you folks have put together that really aligns well with that type of allocation.
So we're always striving to provide the best solutions and outcomes for our clients. Up till last week, we had a dividend yielding solution in the ETF space for clients in CDL. So where you can identify the highest dividend yielders and put them together in a volatility weighted, risk aware way. We said, well, in the spirit of diversification, dividend growth is something you need. So we launched VSDA, which is the VictoryShares Dividend Accelerator ETF. It stands to improve upon other dividend growth ETFs that are out there in the marketplace today. And what it does is, companies that have been able to grow their dividends over time are good companies, right? Because if you're not a good company, you're not going to be able to pay an increasing dividend year over year.
Right.
So we know that companies that are able to grow their dividends perform better as well over time, particularly even in rising rate environments. Well, historically, we've had access in the market only to indices that naively bring that to a client. You have to wait 20 years for a company to have grown its dividends, or 15 years. Well, what about all that price appreciation and benefit from year 5 to 10, the 13th year, 14th year? So what we're doing is bringing together companies earlier in their dividend growth life cycles, putting them together in a way that maximizes that dividend per share growth potential year over year. And by focusing only on those that have the highest potential to grow their dividend, you avoid those companies that might either freeze or cut it. And that's key to keeping your capital.
Absolutely. Okay, one more time, what's the name of the new ETF?
VictoryShares Dividend Accelerator ETF, and the ticker is VSDA.
Great. Mannik, as always, great seeing you.
It was good seeing you
Thanks.
again as well. Thank you.